Walmart, the country's biggest retailer, just sent out a serious warning, one that every American should pay attention to. The company is seeing clear signs that people are struggling more than ever to afford everyday necessities.
In the last few months, have you noticed a change in grocery prices?
Immensely, they've risen quite a bit.
I definitely have to pick what we absolutely need instead of kind of what we want.
Prices are still high, wages aren't keeping up, and families are changing the way they shop just to make ends meet. When a company as big as Walmart sounds the alarm, it's not just about their business, it's about the entire economy. Walmart serves millions of people across all income levels, but its core customers are middle and low-income shoppers.
3. Inflation is having an impact, particularly for those that don't have as much money. So we see them behaving in different ways, but we're also attracting a lot of new customers to come to our stores, to our app.
That means it gets a first-hand look at how much people are spending, what they're buying, and, more importantly, what they're not buying anymore. And right now, Walmart is seeing people cut back in ways that signal trouble ahead. Shoppers are turning to cheaper store brand products instead of well-known brands. They're buying fewer extras, things like electronics, clothes, and household goods, because their money has to stretch further. Many are waiting for big sales or using credit cards more often just to cover their grocery bills. These are all signs that people's purchasing power is shrinking, and when that happens, it's a major warning for the economy as a whole. The numbers back it up. Inflation is still eating into paychecks. Household debt is climbing as more Americans rely on credit to get by. Layoffs are creeping up, and job growth is slowing down. It all points to the same question. Is this the start of another major economic downturn? Maybe even another crash like 2008? Walmart isn't just seeing small changes in how people shop. It's seeing a major shift that could signal a much bigger problem. In its latest earnings report, the company revealed that more shoppers are tightening their budgets, focusing only on necessities, and holding off on bigger purchases. This isn't just about Walmart's profits. It's about what happens when millions of Americans suddenly can't afford to spend like they used to. One of the biggest red flags is the shift in consumer behavior. Walmart's CEO, Doug McMillon, recently pointed out that customers aren't just buying cheaper items, they're actively avoiding non-essential purchases. That means fewer sales of electronics, clothing, and home goods, the same pattern that started showing up before the 2008 financial crisis. When people stop spending on extras, it's usually a sign that they're struggling to cover the basics. Another issue Walmart is warning about is the impact of inflation and rising costs. While inflation has come down from its peak, prices are still much higher than they were just a few years ago. Even if the rate of inflation slows, that doesn't mean prices are dropping. It just means they're not rising as fast. For the average shopper, that means groceries, gas, and rent are still way more expensive than they used to be. And since wages haven't kept up, people have less money to spend on anything else. Debt is another huge problem. More Americans are turning to credit cards to afford everyday expenses, and credit card debt has hit an all-time high. Interest rates are also rising, making it even harder for people to pay off what they owe. That's exactly the kind of financial strain that leads to defaults, bankruptcies, and economic slowdowns. The labor market is also showing signs of trouble. While unemployment is still relatively low, job cuts are increasing, especially in major industries like retail, tech, and finance. Companies that once couldn't hire fast enough are now laying people off or freezing hiring altogether. Walmart itself is adjusting by reducing staff and automating more jobs. Another sign that businesses are preparing for rougher times ahead. All of this paints a concerning picture. Walmart's warning isn't just about its own business. It's about what's happening across the entire economy. When America's largest retailer starts to worry about declining purchasing power, it means trouble for smaller businesses, workers, and even the financial markets. The question now is whether this is just a rough patch or something much worse. Some experts believe the economy is heading for a major slowdown, while others argue that we're already in one, but just haven't felt the full impact yet. Either way, one thing is clear. Walmart's warning is a sign that everyday Americans are struggling more than the government or Wall Street wants to admit. If Walmart is struggling to keep prices low and customers are spending less, that means the average American is feeling the squeeze harder than ever. Families are making tough choices every day deciding whether to spend their money on groceries, rent, or gas. Because for many, there's just not enough to cover everything. The rising cost of essentials has forced shoppers to change their habits. Many people are skipping brand name products and switching to store brands just to save a few dollars. Others are cutting back on trips to the store altogether, stretching out their groceries for as long as possible. Walmart has even reported a surge in customers buying smaller package sizes, meaning instead of grabbing a full-size box of cereal or a family pack of meat, they're buying the cheaper single-use version. That's a clear sign that people are prioritizing short-term survival over bulk savings, which is exactly what happened during the last economic downturn. But it's not just about what people are buying, it's also about how they're paying for it. Credit card use has skyrocketed as more households rely on borrowed money to afford daily expenses. With interest rates climbing, this is a dangerous cycle that could push millions into debt they can't afford to pay back. If credit card defaults start rising, banks could begin tightening lending, making it even harder for struggling families to stay afloat. The job market isn't looking much better. While unemployment remains relatively low, layoffs are increasing, especially in industries like retail, technology, and finance. Companies are hesitant to expand, and many are either freezing hiring or replacing workers with automation. Even Walmart, which employs more than 1 million people in the US, has been reducing staff and investing in self-checkouts and warehouse automation to cut costs. For workers, this means job security is becoming less certain. If businesses continue trimming their workforce to survive, it will only add to the cycle of reduced spending, weaker economic growth, and even more job losses. It's the same downward spiral that led to the Great Recession in 2008, people losing jobs, cutting spending, and dragging the entire economy down with them. The big question now is, how bad will this get? If everyday Americans can't afford to shop the way they used to, businesses won't survive, layoffs will increase, and we could be looking at something much worse than just a slow economy. If one of the biggest retailers in the world is feeling the strain, imagine how much worse it is for small businesses, manufacturers, and even major corporations that depend on strong consumer demand. For businesses, the warning signs are piling up. Many companies are already dealing with higher costs, from rising wages to expensive materials. And now they're seeing weaker sales too. If customers aren't buying as much, businesses have fewer ways to make up for their rising expenses. Some are choosing to raise prices even more, which only drives away more shoppers. Others are being forced to cut costs by laying off workers, freezing hiring, or reducing inventory, all of which slow down economic growth even further. The stock market is also starting to reflect these concerns. Walmart's stock recently took a hit after its latest earnings report, and that's just the beginning. Investors are getting nervous about the overall economy, especially as more companies issue warnings about slowing sales, weaker profits, and rising debt levels. If large retailers and manufacturers continue to struggle, their stock prices could fall further, which could hurt 401ks, retirement accounts, and investor confidence.
In all fairness.
You said, look, we're going to have a disruption, but we're okay with that. Is that what you meant? The stock market going down was the disruption? What other disruption were you alluding to?
Look, what I have to do is build a strong country. You can't really watch the stock.
Another big issue is interest rates. With the Federal Reserve raising rates to fight inflation, borrowing money is becoming much more expensive. This means businesses can't take out cheap loans to expand, and consumers have to pay higher rates on their mortgages, car loans, and credit cards. If borrowing slows down, spending slows down, and that could push the economy into a deeper slump. It's all starting to feel eerily familiar to what happened before the 2008 financial crisis. Back then, people were also relying heavily on credit. Businesses were struggling with higher costs, and the stock market was showing signs of stress before everything finally collapsed. So, is history about to repeat itself? We're already seeing cracks in the economy, but whether this turns into a full-blown recession depends on how businesses, the government, and the Federal Reserve respond. If consumer spending continues to drop, businesses will be forced to react, and we could be looking at a much larger economic downturn. Walmart's warning isn't just about retail. It's a sign of something much bigger happening in the economy. When the country's largest retailer starts seeing a shift in how people spend their money, it means trouble for businesses, workers, and financial markets. Right now, the signs are pointing toward a serious economic slowdown. And if things don't change soon, we could be looking at something even worse. Consumers are feeling the pressure. Prices are still high, wages haven't kept up, and more people are relying on credit cards just to afford basic necessities. Even though inflation has cooled slightly, it hasn't fixed the damage that's already been done. Rent, groceries, gas, and everyday expenses remain significantly more expensive than they were just a few years ago. When people have to spend most of their income on necessities, there's not much left for anything else. And that's exactly what Walmart is seeing. Businesses, too, are struggling to balance higher costs with lower demand. If companies continue to cut jobs, reduce hiring, and raise prices, it will only make things worse. Layoffs are increasing, automation is replacing workers, and industries like retail, tech, and finance are bracing for a slowdown. Even Wall Street is feeling it, with the stock market reacting nervously to signs of weaker consumer spending and lower corporate earnings. The big question now is this the start of another economic crisis? The patterns we're seeing today, rising debt, struggling businesses, and shrinking purchasing power, look a lot like what happened before the 2008 financial crash. Back then, people ignored the warning signs until it was too late. The government and Federal Reserve now have a tough choice. Either step in and try to stabilize the economy, or risk letting it slide into something far worse. If Walmart's warning turns out to be just the beginning, we may be in for a rough road ahead. The signs are there. The cracks in the system are growing. The only question is whether anyone will take them seriously before it's too late.